You are watching Market Watch, the brief overview of the key events from the world of finance. Of course, the main event of yesterday was the decision of the Federal Reserve on the key interest rate, or rather even comments on it. Let me remind you that almost 2 weeks ago it became known about the Fed's decision to leave the rate unchanged, so the intrigue was only in the next steps. According to the published report of the subsequent and comments of the head of the U.S. regulator, the U.S. economy has become strong. This is an important change in rhetoric, which became possible after the release of the report on changes in GDP growth rates for the third quarter. The U.S. economy grew by a whopping 4.9% year-on-year, on the back of increased consumer spending. Relative stability in the labor market and a high level of consumer spending reduces the likelihood of a slowdown in inflation. Therefore, Fed Chairman Jerome Powell said that the committee is discussing the possibility of further rate hikes, while its reduction is not even being considered. All this is clearly a bad signal for gold, significantly increasing the risk of its decline in the long term. Firstly, the largest economy remains strong and, according to the Fed representatives, there are no obvious prerequisites for a significant deterioration of the situation in the near future. Secondly, the risk of a rate hike will contribute to an increase in the yield of U.S. government bonds, distracting investors' attention from gold. Therefore, only a significant deterioration of the geopolitical situation in the world can provide the necessary support to the precious metal. We should also note the dynamics of prices for American-grade WTI oil, approaching the level of $80 per barrel. Investor optimism caused by the unexpectedly strong assessment by the Federal Reserve of the current economic situation in the United States prevented a more significant decline in oil prices. The change in the rhetoric of the financial regulator from a stable to a strong economy supported key stock indexes, which, in turn, played the role of a bullish fundamental factor for the oil market. Nevertheless, demand for raw materials remains moderate, increasing the likelihood of a further decline in Texas oil quotes below the psychological level of $80 per barrel. The statements of the chairman of the U.S. Federal Reserve System had an impact not only on traditional assets, but also pushed Bitcoin investors to another attempt to overcome the $35,000 mark. They managed to do it, but only on the second attempt. Most likely, the success is due to another discussion of the readiness of the U.S. Securities and Exchange Commission to approve an application from BlackRock to create a Bitcoin ETF. However, the activity of buyers above $35,000 remains very weak. This, in turn, indicates that the market does not need rumors, but the real appearance of an investment fund. Therefore, the risk of Bitcoin returning to the support level of $35,000 should not be excluded. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.